my Facebook, and my Twitter at Simon Dixon Twit. What a weekend. So it's almost like things are happening on a daily basis. As usual, if you didn't see my last video, it got a lot of attention on the real estate market crash and the 10 things you need to know and prepare for. Today, I'm actually going to shift gears and go around the world to India. Now, India, I've covered on my channel a few times for their policy on Bitcoin and how they've been similar to China in terms of flip-flopping. But today, I'd like to cover something that's unfolding live right now in India, which is their response to the health crisis. And they're taking actions right now that are very important to overcome the health crisis. But what I want to focus my attention on is a topic that's very undercovered and very underreported, which is how they're actually going to be funding their response to the health crisis and the implications it will have on India in terms of a financial crisis. It's a little bit disturbing and it's a little bit shocking because this is something I actually really looked deep into way back in 2009. In fact, what I'm going to do very quickly is I'm going to be dusting off the old blog. Let me just share my screen quickly so I can show you something. Hopefully you can see my screen now. But one of the things that happens is that I used to publish everything on simondixon.org, and the domain actually got hijacked, but we recently moved everything to simondixon.me. And if you go to the blog section, I'm going to make sure I get someone to update all these posts, because you can see I stopped around 2015, 2016 or so, somewhere along those. But if you scroll to the bottom and go to the very bottom, when I first started blogging around 2009, you will see a post on export warfare. Here's the one. And it was published, looking at that, so it was published around this very early February 2009. And actually, Bitcoin was launched in January 2009, so that's a really interesting timing. But if you're really interested in this subject and going a bit deeper, then I published this blog post here. And it's not what relates to India, but it goes through the World Bank and the flow of funds. So let me just go back to me rather than my screen. I'll stop sharing now, and then we'll get right into the content. So as I said, the India right now, the announcement was that they're going to be taking, I haven't gone deep into whether they're going to be taking it in the terms of the loan yet, but they're going to be taking $1 billion of funding from the World Bank. Now, what I want to do is help people understand more about the World Bank. So in the previous video where I went through the real estate crash and the 10 impacts it will have and the things you need to know and a possible scenario of what you need to prepare for after this health crisis as we move into the financial crisis, I also hinted that I'd go into the World Bank and IMF. I'm going to do that today, but this time I'm going to relate it to a real world use case that is happening right now. So again, with the simondixon.me blog, a lot of it isn't working. We'll make sure we'll dust it off and start updating many of the things that happened over the years. But so the first thing is, as I said, so the World Bank is going to be issuing $1 billion of relief, allegedly, to the Indian government is the headline, which are going to use to build out healthcare infrastructure and to tackle the health crisis and make sure that they can do the testing they need. Now, obviously, India is a country where I do worry about in terms of the spread of the virus. And so they do need to take drastic action because they have a healthcare system that seems like it would be completely overwhelmed from this. So it's a bit disturbing and a bit worrying. And I hope this $1 billion of relief from the World Bank achieves what they need to achieve over the next 4 years, like the terms of the loan. But I want everyone to understand the implications of what it means when you take money from the World Bank, because it's very easy to think that this is some kind of a relief package, but it's actually structured as a loan. And I'd like everyone to understand the flow of funds and the risks that it has on a country such as India. So as I said, Bitcoin launched 3rd of January 2019, and this article where I went through the World Bank and IMF and export warfare happened on was published on the 2nd of February 2009. That was, I guess, when I was working on my book, Bank to the Future, Protect Your Future Before Governments Go Bust, which was the first published book to include Bitcoin that I know of. So the first thing to understand, if you're a regular on my YouTube channel, I'll go much deeper into this in other videos, but the first thing to understand is that money is debt. And money is created as debt. I've covered this in many different videos, and you can go back to my YouTube channel, Simon Dixon, and look at some of the archives to understand more. But the process of creating money is whereby a bank, a retail bank, a commercial bank, issues a loan. And when they issue that loan, they create both an asset and a liability, and new money comes into existence. So when banks issue loans, it's actually the creation of a new digital currency. So for example, they created a digital representation of the pound, the dollar, the euro, the yen, the yuan. And every time a bank issues a loan, new money gets created. That money has to be repaid, and as the money is repaid, the money disappears. So you have to have more and more debt in order to grow an economy, to increase the money supply. But the first thing to understand is that all money is created as debt on a global scale now. Everyone has copied the same system, and we've merged upon this term that we call fractional reserve banking, but it's a very misleading term because there is no fraction, there is no reserve, and it's simply the creation of currency every time they issue a loan. So the first thing to understand is that the flow of funds when goods are exported and imported. So when goods are exported, essentially foreign money enters a country. So let's say you're producing goods in India or China, and you export your goods. When you export your goods, foreign money enters into a country. But whoever purchases those goods is created the money as debt, because remember, all money is debt. And so the way that the whole money supply gets created is when a loan is issued. And then if that money is spent in a different country, then the essentially debt-free money enters the country that was selling you the good. The money is exported from your country, or the country that is purchasing. And the exporter, the country that is selling the good, gets an injection of debt-free money, but the debt remains in the country that created the debt in the first place. I know that's a bit of a mouthful, it's a bit of a hard to get your head around to get that. But essentially, money is created in a country which is backed by debt. That debt is then, that money is then spent in another country. So that country that received the money has debt-free money because they've received money where it was created as a debt in another country. And the country that has purchased the good is left with debt. So that's a very important flow of funds to understand. Essentially, you have, that's really important to go through when understanding this. So essentially, through exports, the country that receives the debt-free money is essentially the one that's ahead. So the more debt-free money you can receive, the better off your country is, because you have all the money in your economy, and then you receive some debt-free money. So this is an influx of money that does not increase the level of debt in your country. Now that money can easily be converted. So let's say we're dealing with the Indian rupee and the United States dollar. The United States will create the digital version of the United States dollar is created every time somebody takes out a real estate loan or somebody borrows on their credit card. That becomes the money supply, the digital currency that of the US dollar. That is then spent in India. India produces some goods. and they receive some debt-free US dollars. Now, they can obviously go to the foreign exchange market and convert that to Indian rupees. And when they convert those to Indian rupees, then they end up with their domestic currency. But the debt remains in America in that case, and the debt-free money is exported to the India in that case. So what you can imagine is this creates a scenario in the global world where everyone wants to be an exporter. The more you export, unless you have a superpower currency like the US dollar, then the more you export, the more debt-free money you get, which is then converted into your local currency. And essentially you have this thing, what I call export warfare. That was taken from a book that I read, I think it's called Grip of Death. You have this export warfare. This is why prior to this crisis, there was a trade war between China and America, where essentially China was devaluing their currency so that they could export more goods. The US had the world reserve currency, the US dollar, and were the largest importer of goods from China. By devaluing the currency, it meant that China was able to export more goods because their goods become cheaper, and therefore more and more people are willing to take their dollars, purchase those goods, and then China gets this influx of debt-free money, which made it the largest superpower economy and the highest growth story over the last decade or so. So China used currency devaluations in order to get injections of debt-free money. The US had the largest debt-based system because it had the world reserve currency, to the point where it's pushed its debt up to, I haven't even looked at the figures after this health crisis, we're probably going from 24 trillion to 30 trillion, wherever it is right now. And China has been the beneficiary of that debt-free money, which has allowed it to boost its economy in a very big way. So those that import the most are the losers, unless you have a superpower currency like the US dollar. Those that export the most are the winners in this scenario, because you get an injection of debt-free money in order to push your economy forward. Essentially, that is the relationship. And so the reason that China and America were in that trade war is because America was trying to reverse that trend. China was devaluing its currency further in order to push that trend. And then prior to the health crisis, they signed an agreement, and then everything obviously focused on the health crisis. You can see how the conspiracy theorists then start to think about, how this was a reaction to the trade war. I try to avoid those and just stick to the flow of funds and financial things. Essentially, exports help the economy, you end up in this world where everyone wants to export. You get real growth based upon sales, and essentially this kind of explains why you have, if you're in the humanitarian movement, you have countries like Africa that have real starvation problems in their country, and yet they're driven towards exporting all of their food to other countries. And that's simply because if you become an exporter, you get an injection of debt-free money. And when we introduce the World Bank and the IMF into this equation and the financial systems, you'll understand why. But for a normal, rational person that doesn't understand the flow of funds and doesn't understand how the financial system is currently driving actions that drive you to actually not serve people in your country, but serve the markets, is simply because, it explains why Africa would export their food at the same time while there's people starving, because they get an injection of debt-free money that allows them to try and get their economy back on track. But it's once you understand the developing country loans that you start to see some of the problems with this and why they're driven to such action, which is so counter to the health and action that your country would want to. essentially it's a form of debt slavery. If you can get a country to take a loan, then you can, then I'll go a bit deeper into that. You lose goods from your economy, but you gain debt-free money. And this is all because of the way that governments have outsourced money creation in a crazy Ponzi scheme, what I call the fiat Ponzi scheme, whereby they've allowed money creation to be backed by debt, and therefore you're driven to these types of actions. So let's start looking at the World Bank and the International Monetary Fund. So the World Bank is the one issuing the loan to India in this case. And in the article I wrote in 2009, essentially I went into a bit of the history. So for those of you that don't know what the World Bank is, the World Bank is a heavy US-centric organization that was essentially founded in 1944 in order to issue loans to redevelop the world, reconstruct the world after the World War. So, you know, the World War drove economies all around into a state of depression, and therefore the World Bank was set up in 1994 to further economic development and world development and essential infrastructure. The bit that people misunderstand and misrepresent is the headline normally says World Bank is saving India or you know, giving $1 billion to India. The reality is it's actually a loan. And that loan is normally denominated in US dollars. So you have all of the foreign currency risk. So with a strengthening dollar and weakening other currencies, you end up with these loans that are, for anyone that's ever borrowed money in a foreign currency, it's a really bad idea. It's like, I remember many people in the early days of Bitcoin used to borrow some Bitcoin, and then the price of Bitcoin would go up. They had to spend in dollars, and they would end up being bankrupt because they had to repay the amount of Bitcoin, but the Bitcoin was worth so much more. And it led to some of the really early Ponzi schemes in the early days of companies that were doing stuff with Bitcoin. But the World Bank essentially issues these loans, and that's used. They tend to be, since it happened, they tend to be used by countries with lower GDP, call them developing countries, poorer countries, whatever you want to call them. I'm trying to think of the right term here. But countries that need the money, they tend to have been the recipients of the loans. To understand the IMF, the purpose of the IMF was essentially it's an international reserve of money. Think of it like a global overdraft. Essentially, institutions that subscribe, countries that subscribe to the IMF, the International Monetary Fund, they all originally contributed funds. And those funds would be used when people needed access, or countries, sorry, when countries needed access, members. So you had to contribute funds originally, and then the members would actually be the beneficiary of any emergency loans in case of a disaster. So this was the International Monetary Fund. So I think essentially it was a pool of different countries pooling together their money, and then they could draw upon that and draw a loan. And that loan, if they needed to do it, would have to be repaid plus interest. It didn't matter what the GDP of your country was, whether you were from a rich country or a poor country, you could become a member of that. And then you could temporarily borrow money in times of difficulties. Now, what happened with the IMF is it actually changed when it issued its own global digital currency called special drawing rights, SDRs. And SDRs were essentially like an overdraft. So think of when you open a bank account, you might have been given an overdraft, and essentially you could spend more money than you actually had, and then it would incur interest, but it would allow you to spend more money than you had. So these special drawing rights were essentially a ginormous overdraft facility for the country's members that were members of the International Monetary Fund. Now, where this all got really funky, so again, you can understand the intent of this, Where it got really funky is when the loans that you received from the World Bank came with certain conditions. And this is what I'm forecasting with the $1 billion with India right now. Now, the $1 billion is going to be spent by India on building their infrastructure and their healthcare infrastructure. But those healthcare facilities, I'm pretty certain, are not going to be built in India. They're not going to be, the money's not going to enter India. The money will enter India. It will be spent on building out, all the respirators and healthcare and hospitals and infrastructure that the world needs. But it will be borrowed most likely either in dollars. And again, I haven't had time to research the exact terms of the loan because I'm not sure we're going to be privy to such information. But it will be borrowed in dollars, which means that they have a foreign currency risk in repaying those loans, especially in a world of strengthening dollar. But then if we have a shift, as I talked about in previous videos with those currency wars, then this may or may not work in their favor in terms of what happens with the US dollar as we enter this new phase. I talked about in other videos about currency wars. I think the video that I created was your money is worth 99.5% less than you think it is, was one of the videos, if you want to understand a bit more about the currency wars. Also, if you want to know a bit more about money creation, then it's the 6 forms of money was one of the videos that I created. And if you want to know my forecast on what happens after this health crisis and the real estate crisis, the last video I created prior to this one was the real estate crash and the 10 things you need to know. So anyway, the loans come with agreements to purchase goods from developed countries. So essentially, my guess is that this $1 billion loan will come with a tied aid agreement. They call it tied aid, where they issue the loan in US dollars, they subject the country to currency risk, and then that $1 billion goes straight back into the US or another country that is producing those goods. So, let's say all the respirators are coming from China. So India will borrow that $1 billion and they will spend it immediately in China and whatever tied aid is negotiated that comes with this. So the money automatically leaves to the exporting country. Now remember the rules of imports and export and the flow of funds. You borrow the money in India, you have to repay plus interest, you spend the money in another country, i.e. the US or China or wherever it's going to be. Those countries get an injection of debt-free money, which allows them to support their GDP growth and their economic growth in that country, but the debt remains in India. So essentially they're signing up to $1 billion of debt and GDP growth for the other countries, which essentially cripples that country into debt forever, and which is why we see this inequality in countries where you have countries that are producing commodities, they're producing goods, they're highly efficient countries, but they don't serve their own people, and you have mass poverty in that own country because they have to export all those goods, and then the debt-free money goes to the country that's the recipient in this export warfare, all because money is created as debt. And so there's huge consequences to having a monetary system whereby money is created as debt. Rather than some of the monetary reforms that I've been talking about over the years that I think we're going to see after this health crisis as countries catch on and we enter into the currency war phase. So these things are called tied loans, and they cripple countries after the things. Now, I perfectly understand that this health crisis is driving countries into making irrational decisions that they need to make now because obviously the health crisis is so severe, but the financial consequences after that are going to be, really, really, catastrophic if we stay with the financial system that we currently have. My belief is that we've chucked so much at this health crisis that it's going to drive people to radical monetary reform, radical banking reform, and a different financial system. And I've talked about that many times over the years, what that could look like. Um, so essentially, the net effect, just in summary, is that the money is lent, normally via a wealthy nation's financial product, spent back into a wealthy nation, and the debt remains with the developing country. Now, the bit that gets even more funky, if that wasn't enough, is where the World Bank and the IMF got the money from in the first place. So in the case of the World Bank, they essentially issue, just like quantitative easing in other countries, the World Bank essentially borrows the money through the bond market. So the World Bank uses its credit rating to draw up a bond, which is essentially a digital entry in a computer, and it sells it to the retail commercial bank. So your banks, remember I talked about how fractional reserve banking doesn't even have a reserve. The reason for it is because they don't actually hold cash reserves. They hold their reserves in bonds, and those bonds are actually created as debt. So therefore, the reserve of a retail bank isn't actually what it used to be when the original asset liability ratios came up. They're actually debt-based instruments because they receive interest on their reserves. And so therefore, these bonds, like World Bank bonds, are sold to retail and commercial banks, and they use as those reserves, and therefore their reserves don't exist. It's money as debt is their reserves. So this is why I talk about fractional reserve banking as a very misleading term. But essentially, the World Bank draws up those bonds and then lends it to the retail banks purchase them with money that they created as debt in their own country. So essentially, this is the big Ponzi scheme that I talk about with debt-based money. And now you've got it at a global scale at the World Bank level, where essentially they didn't even have the money in the first place to issue the loan. The irony and the message that I'd give to India is that you can actually do this with your own central bank, and you don't need to do it as debt. You just need to stop listening to mainstream economic models of how to actually create the money supply. And so India has the opportunity to do this. And again, I don't like to leave these videos with people feeling disempowered. I like to offer solutions that people can follow. But this is the injustice of the system. The World Bank just created that money, issued a loan to India. India borrows a US dollar denominated loan, subjects itself to currency risk and currency wars, then spends all that money in another country, which allows their GDP to help the wealthy country grow. And the other country is crippled with debt. But there's a big difference with debt in your own country and debt to another organization. If you are borrowing, so quantitative easing right now, and this was my argument, I'll do another video on Europe. I haven't really discussed that. But I was recently on the Tone Vays show, and I discussed a little bit when they asked me a question about Europe. Europe subjected all these countries to the policy of the European Central Bank. Is why Brexit was a little bit strange, because England was the only country that actually still had their own Bank of England and was able to control their monetary policy within their own central bank. All the other countries are at mercy to the European Central Bank. And some would argue that Europe is simply big Germany, and the other countries, when they need to do things like quantitative easing, they have to beg the European Central Bank, which is when they had their own central bank. So there's multiple flows here of why being in debt to another central bank in another country is a bad idea. So I talked about the International Monetary Fund. They created special drawing rights, which was essentially an overdraft facility. And that overdraft facility was money creation as debt, where if you borrow that money, essentially they created new money as debt. But it was backed by the quotas as reserves. So this is a bit like fractional reserve banking. The members of the International Monetary Fund provided the reserves, and the special drawing rights was money creation on a global scale with the world's first global digital currency before we had Bitcoin came along, that then created the world's first apolitical, politically neutral fixed supply, allows you to spend your own money allows you to own your own money, and has a fixed supply that's not based upon politics or any country's agenda, which is completely game-changing. So essentially, the national debt, so here's the difference. When you willfully borrow from your own central bank through quantitative easing schemes or government fiscal policy or monetary policy, you essentially are at the mercy of your own country's central bank or your own country. When you do it through an organization like the World Bank, it's international debt, which essentially puts the control of your country outside of your country. You're essentially giving up your country to essentially the World Bank, which then you have to look at what's actually behind the World Bank. But you're removing power to the country or the organization that you lend to. And they obviously add terms to those loans. And therefore, essentially, that can be used in order to get political will, political influence over your country, because you can always call in that loan or do things with that loan depending on the terms. So these loans can then be used to buy all of the assets in the country. So you've seen many countries, developing countries, do privatization schemes, where essentially they're selling off the assets of the country, and they're using, and obviously the beneficiaries of those are the countries issuing the loans, and therefore you can end up controlling many of the world's assets in the wealthy countries, and because of the loans, it keeps the poorer countries in a situation of poverty, where they're just simply servicing these loans with currency risks. It's a real injustice. It's a real negative consequence of having a money supply that's built upon debt. Now, the really interesting thing with India right now is that the central bank has essentially waged war on Bitcoin more recently. So, I was a shareholder in some of the Bitcoin exchanges in India, like Unocoin. And they've been going through a battle with the Indian central bank, whereby the Indian central bank, firstly, they obviously had their war on cash that they looked to implement, whereby they were trying to get everybody's money out of cash and into the bank so that they could perpetuate a digital currency debt-based economy and copy the Western world and drive an economy built upon debt. In a country that really, really valued gold and real assets, where the vast majority of the population valued gold and was very skeptical of banking. When you told them, hey, I've got an idea, why don't you give me your money, put it with me? An Indian person, like, why would I do that when I could hold gold? This is a culture of real assets that's being driven into the debt slavery as a result of these systems. But the Indian central bank, they obviously had their war on cash to try and stimulate the debt-based digital currency. They're obviously been making several announcements about launching their own digital currency. And what I would encourage India to do is use their own central bank digital currency in order to fund the health infrastructure, because at least then you will be subject to your own policies. Now, many people talk about how this can cause hyperinflation, as it has if you don't do it correct, which is why it also needs to be correlated with debt deflation, as I talked about in my previous videos as well. But borrowing the money from the World Bank will have crippling consequences and remove many of the political decision-making from your country to another country. They also, what I'm really proud of, there's lots of hope here. So India have already developed their own central bank digital currency, so they can take back control of their fiat digital currency should they choose, rather than following the debt-based model that they did when they tried to make cash illegal and get everyone to deposit in a bank so that they could get involved in money creation as debt. So India is ripe and perfect for the types of reforms given the culture and the circumstance and the consequence of the country. And also, I would certainly suggest that the country removes their ban on Bitcoin exchanges like they recently did, The central bank was debating that, giving their people the ability to purchase Bitcoin. It's a culture that understands gold. Eventually, it's a culture that has a very IT literate population as well. I hate to make generalizations, but that's just the way it is. But it's a country that was getting really big growth in Bitcoin exchanges. And I think that's a really important service for individuals in the current environment. And thankfully that was brought about, but we haven't seen those exchanges relaunch, and we've seen some appeals from the Indian central bank as well. And so there is a real glimmer of hope. And as I would also, so there was a previous video that I'd refer you to when I talked about, it got a lot of pushback, but how Bitcoin could become a global world reserve currency by 2020. It was created in 2019. And I talked about a systemic shock event. And I talked about, in other videos, 7 types of systemic shock events that could cause a financial crisis, whereby the Bitcoin could become a world reserve cryptocurrency, and how it would happen. Now, if I were India, I would be allocating some of my electricity towards betting on Bitcoin mining, and I would be getting my central bank to hold some Bitcoin as well as the reserves here. They're already making major risks by taking these World Bank loans in denominated most likely in dollars. I would say take a much, much higher risk, higher return opportunity, and hold some of those reserves in Bitcoin. And you could become one of those central banks that essentially becomes the real beneficiary from such a policy. The likelihood of that actually happening in a country like India is very, very low. But this health crisis is driving forward much of the innovation and much of the decision-making process. So I hope that was useful for you in terms of understanding the flow of funds. I understand that some of these concepts are pretty tricky to grasp, but I will continue to create content. And so let me know what you think. I also would like as many people as possible to get hold of this content so that they can start to plan their personal finances. I'm talking about the big macro level here, but in future videos, I can talk about the micro down to the individual. And I do talk about that in many of my videos. And so what I'd love for you to do is if you could subscribe to my YouTube channel, Simon Dixon, then I will continue to create these videos. And just let me know in the comment section what you would like to see. Also, YouTube has been acting very funny recently. And the algorithm states that the more likes I have on this video, the more likely people are to see it. So if you've watched this far, then do me a favor, give it a like, give it a retweet, share this video with anybody that you think is interested, so that I can start to actually perform better in the YouTube algorithms in this time when lots of people are sharing conspiracy theories and all sorts of stuff. I think questioning information is really important, and conspiracy theories play a very important role in getting you to see the other side and question information. But at the same time, they can leave you with the power of feeling very disempowered. So my goal is always to try and drive, when I talk about big problems, I also want to talk about big solutions as well. So if you like this, please do like, share, retweet, do whatever we can to get more people to subscribe. And I'll keep creating videos, and let me know what you would like to see in future videos. Stay safe, everybody. Peace over and out.